Okay, so let's start now. So sorry for the delay. I'm having a bad network issue. Okay, today I want to show you the power of self-control in trading. I want to discuss about power of. Okay, can you hear me? Okay, so let's continue. I want to discuss about the power of self-control in trading. Okay, what I mean is that there are some times when you are trading, at the beginning, you started to make some profit. Started to make profits, and along the in the long run, and maybe out of maybe you don't have any aim of the number of trade you want to take. Then you started to make five consistent profits. Then your sixth trade, which you entered next, end up with a loss. The next thing you know, you did not stop trading. You still continue. Seventh trade, end up with a loss. Eighth trade, end up with a loss. And before you know, the ninth or tenth trades, you also end up with with a loss, and you end up blowing the account. Okay, so today I want to discuss about self-control, like able to control yourself. It's not easy to control yourself, but according to trade, you must have to control yourself, and do not do not overtrade the market. Not able to control yourself is what makes you to overtrade the market. Okay, so if you are trading on a small account like $5, and your each trade is $3 per trade. First trade you won, second trade you won, then third trade you lost, and your fourth and fifth trade you also lost. So what do you think is going to happen if you didn't stop trading at the moment and come back in the next 20 to 30 minutes, or let's just say at least 1 hour? You end up blowing your account, and you end up losing your money. So let's say, for example, here, look at this trade. Some minutes ago, I took this trade. Some minutes ago, I took this trade. I was trying to see what I've done to what I would do if I trade on a small account. Look at the balance here. As you can see, the balance is $1.92. Okay, $1.92. Look at the amount I'm trading with. Also, look at the time frame, 1 minute. Look at the chart type, candlestick with 1 minute. Okay, so what gave me the impression that okay, this time I want to take trades based on um, candlestick charts, candlestick pattern. It is how the market presents itself. That is how I will take the trade. Okay, so it is not necessary that I will first uh, decided this is the kind of strategy I want to use. Okay, it's not necessary. Only if I decided that okay, I want to take five trades, and these five trades, it's going to take at least a whole day for me to accomplish this five trades. So in this case, I will make sure that I stick to one trading strategy. It can be three, candle up, three candle down trading strategy, supply and demand trading strategy, support and resistance trading strategy, the fair value gaps trading strategy, um, liquidity sweep trading strategy, and what again, and so many other strategy. If I decide that one of these strategy is what I want to use, that okay, if the market presents itself show a sign of any of this strategy, then this is that is how I'm going to trade. You know, for me to accomplish five trades, it might take up to a whole 24 hours or a whole day for me to accomplish five trades. But if I decided that okay, as long as I have know the analysis, know how to analyze the market perfectly, well, there's no need for me to waste much time. Let me just trade in respect with market structure. Like, let me just trade the way the market presents itself to me. Look at the PDF I sent to you, how to trade buyers and sellers area on binary option. If you look at the if you look at the examples of those trades, you see that it's it's very simple. The analysis is very simple. But in some cases, how do you know that? How can you find out that this is how you're going to trade the strategy, or this is how you're going to do the setup, or where is buyer sellers, or where the buyers, or the sellers? So that is one thing about self control. Okay, control yourself. Don't overtrade the market. If you are losing, maybe you are trading, taking 10 trades, then you win. Then at the end, you reach the eighth trade and you start to lose market and start to lose the trade. What do you do in that kind of situation? Stop trading immediately. That is what you should do. Stop trading immediately. Come back in the next hour, in the next 1 hour, in the next 30 minutes, in the next 20 minutes. By that time, you know the kind of trading setup. The market will even present itself a new structure that will help you, that will make you to understand the market clearly. Okay, so take a look at this example here. Okay, a few minutes ago I took some trade here. So if you look at this chart here, I did not take any trade here because the way I analyze the chart here, the way I see the market here, the market has already given me a clue that it is dangerous for me to open trade, a buy trade here. Why should I even open a buy trade? There must be some reason, because on the left side we have this shadow. This shadow started from this point and stop here. Started from this point and stop here. This point and stop here. That is why even this strong red candle able to violate the lows but still reverse, a buyer still enter. So if I should draw the bias area, I will draw the bias area from here to here, extend it to the right side. So in that case, what is happening here is that this candle is currently at the bias area. So the question is, should I go with bias, or should I leave the market? Or okay, what I'm saying that the question is, what will be your prediction here? Is it bullish market, or you don't trade this type of market, or is it bearish market? Next candle. Okay. So when you finalize this, what will be your answer? For me, I will not take any trade here. You know why? Though I'm seeing some sign the buyers is likely to enter the market. Okay. Also, we have rejection. You can see this rejection. It indicates the buyers are here. Okay, that is why we have buyers on the left side. It indicates buyers are here. Reason why I will not go with buyers is that on the left side, I've already saw sellers movement on the left side. Also, the beginning of this downtrend, this sellers movement here, it begin from this supply, or let's say resistance, followed by a bearish engulfing. Okay, a reversal sign, hanging man, a breach engulfing, reversal sign, followed by a sign of strength, SOS. Okay, remember, sign of strength, SOS. The next bias area is here. That is why sellers entered here. Now, when the sellers entered at the bias area, is it necessary that I should go with bias? No, I will not even take the trade because it is 50% chances market will reverse and 50% chances sellers will enter again because of this momentum. The sellers are not yet weakened by the power of buyers. So definitely buyers will likely to fail to enter. Also, the price is still at the buyers area. It also means that the price is likely to reverse. So in this kind of situation, I will not take any trade here. So I'll move on to the next trade. Okay, move on to the next trade. So this is the next trade here. The next trade, do you know why I took this trade here? Anytime I'm trading, I always want to see market structure forming like this, down, up, down, okay, down, okay. Then from this level, I've already marked out the buyers, the supply, and expecting the price to reach that level and drop. This is the kind of pattern I always like to see whenever I'm trading the market. Okay. Also in the downside, down, up, down. Okay. Then up again. Can engulf this high like change of character. Okay. So in this case, I'll be expecting that okay, if price come to this level, my prediction is to go like if price drop to this level, my prediction is bullish, right? So this is the kind of trading pattern I want to see anytime I'm trading here. Though, but I couldn't find it here. Then what I do next is that I quickly understand what the market is doing here. Okay, the pattern that I'm expecting did not form here, but I quickly understand what the market is doing here with respect of a single candle pattern. Okay, take a look at this. You see the market drop and the price reached this level. You see this rejection. It means that the market slightly move higher and drop again. Okay, then from this level, the price continue to push higher. So if you look at the market structure perfectly, you see that the market has already violated this low. Okay, the market also violates this high. So when the price drop again, it continue to push higher. So this level here, this area here, is called the stop hunt. Stop hunt, or you can say manipulation. Sometimes stop hunt, you call it SH. Okay, why this high here can be change of character, or you say market shift, right? The price shift. Okay, then this bullish movement here prove the buyers entered and pushed the price up, which is a sign of strength. Then the market start to make correction. Market start to make correction. Look at where the rejection occurred. Rejection occurred exactly from this demand. Okay, exactly from this demand. If I was to extend it to the right side, okay, rejection occurred exactly from this demand. Then, not only this rejection, this candlestick, it looked like hammer candlestick. Okay, like I said, hammer candlestick found at the supports, the sign of reversal, right? That is why the buyers entered here. Okay, buyers entered here because of this hammer. Also, not only that, I can see a bullish engulfing. So if I look at it very well, what will be my next trade entry level? Okay, next trade which expected the price to go or reach before we see some sign of sellers. If I should draw a trend line started from here to this level, it seems the price has already reached the trend line level. Or it's possible I draw a trend line starting from here, it seems the price almost reached the trend line level. Or it is possible if I didn't use the trend line, I make use of this horizontal zone. Okay, expecting that if next candle here will be green, we expect the price to reverse from this level, right? So let's see if that is the case. Okay, let's see if that is the case. So I open trade with higher option. Okay, okay. Now this is one thing about. Let me explain something here. You see what the market is doing? Almost go up, but still drop. Price continue to push higher, then sellers are trying to go down. Do you know why? Because of that trend line I talk about. The trend line. The trend line the market has already been triggered by the trend line, indicating that there are some sellers at this trend line. So definitely sellers is likely to enter. But because of this candlestick, the engulfing candlestick, so it is likely the price is likely to go higher. Okay. So what do you do in this kind of situation? Just keep calm, wait for the market to close. You see, if your trade end up in loss, accept the loss and move on. But you see that I use the old balance because I'm only having $1.92, $1.92. Okay, so I use the old balance. So in that case, I'm expecting a profit in return. So what I do here is that I continue to observe the market. Observe. You see the buyers are trying to enter. You can see buyers are trying to enter. You can see. You see buyers are pushing the price. Market is trying to go down. Buyers are pushing the price. And what happened? At last, buyers won the war. Buyers win. Okay, and I won the trade. Okay, so I won the trade. You see that sellers push the price down to this level, and the buyers quickly move on based on because of this bullish engulfing, which also indicates a strong demand, like a strong downtrend. Okay, that's close with the rejection, continue down to this level. Okay, create high, continue down to this level, and then boom, you see change of character, stop hunt, manipulation. Okay, so the price rejects, close reject from this demand and close as green. You can see single candlestick. Sometimes when you understand the market, it is easy for you to predict market without any stress. Okay, so I won the trade. Okay, I've already opened the next trade here. Okay, I use the old balance 3.69. Okay, I use the old balance 3.69. That is $3.69. Why go with sellers here? Based on this market structure, I'm only trading based on the reaction when the price reach the key area. Key area here is called the supply. Okay, key area is called the supply, and reaction is this rejection from sellers. Supply is sellers area, right? So definitely from sellers area, I'm expecting sellers to enter. Okay, but if I analyze like this, sometimes the market will not give me what I want. So it's not until when you see supply you place your trade. There must be some components that make the market, the price, to give you exactly what you want. Some components like FOZ, fake out zone, liquidity. Okay, FOZ, we call this here fake out zone, FOZ, fake out zone. Or you say liquidity, anyone you like to call. You know, there are so many uh, trading jargons. Okay, liquidity. Okay, retail trader liquidity. Or we say fake out zone, FOZ. Then from the supply, we have um, change of character. After this bullish market, okay, we have change of character here. Then from this change of character, we have the fair value gap, FVG. Okay, so that is why the market reacts from this fair value gap. The fair value gap have already been mitigated. So this next one is the supply. Okay, fair value gap has been mitigated multiple times, which is this, this, this. But this time, this candle did not respect the fair value gap. It's heading next to the next reversal zone, which is the supply. So immediately I saw this, I did not, though I did not give his illustration reason why I took the trade, but I've already saw it. Look at the chart. Then I pick the trade, I open the trade. So what I did here is that I go with sellers on the next candle. Okay, so sellers entered on the next candle, and let's see if I want the trade. I see very strong sellers, and that is how I want the trade. Now, the third trade, okay, look at this third trade. Next thing that most of what you be like, what likely to consider here or observe here is that look at the market here, look at the chart. What exactly do you see? First thing first, what I'm seeing is a bullish market, impulsive, corrective, impulsive, corrective, impulsive. This impulsive has some break of structure, okay, BOS, break of structure, BOS. Also, you have the demand, okay. This demand here is called drop base rally. The demand zone here is called rally base rally. Demand zone here is called drop base rally. Okay, what I'm saying is that we see drop base rally. Okay, that's demand. Then also we have rally base rally. Here the base here is demand. Then also we have drop drop base rally. Okay, so here we have the demand. Now from the demand, I can see rejection from buyers. Remember, buyers demand. It means that um, the buyers exceed sellers in this situation. So we are seeing rejection. So the most component is this break of structure, demand, and rejection. Also, a bullish market. Okay. So what I do here is that I go with buyers after seeing rejection. You know, sometime I go with buyers with let's say um 70% confidence. Do you know why? Because if I want to trade here in this situation here, if I want to take trade here, I'm not going to use the O balance. Sometimes I only want to risk this account. That's why I trade the O balance. But I don't advise you to trade like this. Okay? So I'm not going to use the O balance in this kind of situation because it's still possible the sellers will still likely to go form one more red candle before it reverse, right? But I only say, okay, let me risk $7.08 in this situation. Okay, so that I go, I go with bias with the full amount or with the whole balance in my account. Also because of this rejection, so I'm not 100% confident in taking this trade because the candle did not close inside the zone. 100% confidence is only when the price close inside the zone. That is why I go with bias, even without blinking an eye or without even doubting the outcome. Okay, I'll just go with bias because I know the market is resting at the bias zone. So definitely bias is likely to enter. But I'm not 100% confident because this rejection and the candle didn't close inside the zone. Also, if you draw a trend line, the market is not even correspond with the trend line. So I just risk the account. Okay, so let's see what happens next. So I open a buy trade here, okay, with all balance. And to my surprise, the market formed a strong green candle, okay, and that is how I won the trade, okay. Then move on to the next one, the next trade, okay. This trade here, I wanted to go with buyers. Look at the balance here. I've changed the balance to $13.59 cover. Sorry, 59 cents. $13.59. Okay, but I look at it very well that there are so many influences or there's so many circumstances that will make me to go that will make me not to predict a lower option here because I can see a bullish movement, no single red candle, okay, no single red candle with this bullish movement. So it's a sign buyers are strong, but also the price is now at the resistance. It's still also a sign sellers will enter. So if your analysis is 50-50 prediction, do not take any trade. Wait for the perfect moment. Okay. I saw momentum. I also saw sellers area. So if I go with sellers, buyers will likely to enter. Or if I go with buyers, it's possible sellers will likely to enter. So it is not, I'm not confident here to take any trade here because there's 50% chances I will lose the trade. Oh, sorry, there's 98% chances I will lose the trade. So what I did, I did not open the trade. Okay, I observe, and to my surprise, the buyers enter the market instead of sellers. Okay, I see buyers enter the market, and that is how I was able to escape loss in this trade. So move on to the next trade. You see my balance is still $13.59. So it's probably I go the old balance, I use the old balance. Okay. So move on to the next trade. Okay. The next trade here is quite simple. I use the old balance. In fact, there's no one that will confuse me that buyers will enter on this trade. Remember, I always say buyers area, sellers area. That okay, this is buyers area. Okay, this is buyers area. But if you try to understand what the market is really doing, then you'll be 100% confidence that market will not respect this level again. Do you know why? I look at the chart. You remember I predicted the market to reverse from this demand, right? Which has already been reversed because of this bullish movement. Okay, so I came back to the chart again one more time. I look at the chart. If I should draw a trend line, it means that the price have already violate the trend line. Okay, the market did not reverse. Instead, it violated the trend line. Also, I'm seeing a double top, a sign of trend reversal, double top. Also, immediately the price violate the trend line, there is a correction in the market that corrects the price and has a huge rejection from sellers. Then from the left side, a resistance, which also known as manipulation of the highs or previous high, also called stop hunt. Okay. Then if I should extend the trend line or the line to the left side, rejection the price rejects, and sometimes we call this pattern the Quasimodo pattern, QML, Quasimodo line. So this Quasimodo line, the price rejects from the Quasimodo line. Then the next level is here where we expected the buyers to enter. But if you see, look at this candle here. This candle, immediately this rejection occur, a strong seller's entry occur as well, indicating that there's so many sellers in the market at this moment. Okay, so also this pattern is bullish, sorry, is bearish engulfing, a bearish engulfing, a bearish engulfing, and the price close as the supply or the demand or the buyer's area. So in that case, I will not go with buyers. There's a small upper gap from the close of this bearish candle to the opening of this next bearish candle. If you look at it very well, you see that there's a gap above. It means that sellers is likely not to respect any buyer's area at all. So immediately I saw this, I quickly go with sellers immediately with a balance of $13.59. Okay, so I expect the price to go down. Confidently, I'm 100% confident, but I'm still doubting because of my entry point. My entry point, the price supposed to open, my entry point supposed to be exactly at the opening of the next candle, but I was too late, a little few seconds late. Okay, a few seconds late, so I end up opening the trade here. So it is possible the candle will just close above my entry and loss the whole money. But in this situation, I expect the price to go down. But let's see what happens. Okay, let's see what happens. You see, start to enter the market. Sellers start to enter the market, and their buyers are penetrating. Do you know why? Because the price is still at the buyers area. You can see very strong sellers candle, very strong sellers, very strong sellers. Then also there's a demand zone here, like rally based rally. Okay, you can see some rejection from the demand. It means the buyers are present here. Okay, okay. I'm talking about this demand. You see some rejection, and that is how I won the trade. Okay, so I won the trade, then move on to the next trade. Now my balance is 26.09. Okay, you know what I did next? I do not go with 26.09 because I've already made enough money now. $26.09 from $1 increase it to 26 increase it to $26.09. Okay, so I'm not going to use $26.09 on my next trade because my target is to reach $20. My target for the section of 10-minute trade is to reach $20, which means that in the next few hours, I will come back to the market, continue from that $20 to at least 100. Let's say at least 20 to 30 minutes spent in the next trade section. Then from 100, continue again at least 150 or 200. So that is how you can make consistent profit in trading. It's not that anytime you see market opportunity you go with buyers or sellers. No, try to reason why. Okay, control yourself, self control, control yourself. Do not do what others are doing, making $1,000 a day, $700. No, don't do that. At least if you start from a lowest point, that is why I don't trade higher. Okay, make higher profit because trading is not like gambling. It's like daily target. You know, this kind of this profit now is something is big money in my country here in Nigeria. Okay, if you make this kind of profit a day, is a big money. At the end of the month, if you make this kind of profit at the end of the month, you make a big money. So you see that it's not something that will be stressful. Open multiple trades for you to make big money because no, it's not gambling. Take it as a business. Okay, today you make $50, tomorrow you make $50, next tomorrow at least in a month you're able to make $1,000. So before you know, you are making enough profit. So let's continue. See what happened here. Okay, this is why when market start to go against me. Okay, I look at this trade here. I wanted to go with sellers, but immediately I found out is that after this movement here, bullish movement followed by a change of character. Okay, followed by a change of character and followed by fair value gap. Okay, so from the fair value gap, I can see rejection, rejection, reversal sign, and sign of strength, SOS. So it is possible the market is likely to go more up from this level. So that's why I say, okay, next trade opportunity is here. Okay, I was hoping the market will reach this level for to go with sellers. So that's why I say I will not take any trade in this situation. So I did not take any trade here because I know what is going to happen. I might end up losing the trade and also I might end up winning the trade. So my chance of winning is too low. Okay, my chance of winning is too low. So I quit the trading here. Okay, because I see what is happening. Okay, you see rejection, rejection, and sellers is trying to enter, buyers is trying to push it. So it's my chance of winning is not uh, sufficient for me. So look at it now. I've already reduced the balance to $5.09, which means that I'm a, I'm risking I'm only risking $5.09. Okay, let's see what happens next. And that is that. I did not take any trade. I quit. Then I move on to the next one. I use $5.09. Okay. Remember when I said something about this demand zone? Okay. Draw a rally based rally. Finally, market response to the level buyers entered. I should have known that this is what the market is doing. Okay, I should have known that market is likely to go more up, but I didn't observe that. I'm only observing what is happening, what has happened some minutes ago about this level here. Okay, so because we have support here, also we have this what do we call it? Something like I will remember it now. Okay, and maybe I will remember it later. Okay, So I was really focusing on what is happening here. I'm not focusing what is happening in the past few minutes ago. Okay, I only looking at what is happening here instead of here. So immediately this candle here got a rejection from this demand. It's likely there's a more buyers in the market. That is why buyers enter very strongly. So this expected the price will go more up, just like the the trade here, just like this trade here, just like this trade here, just like this trade here. I'm supposed to go with sellers. And I'm supposed to go with buyers on those trade that trade. But same thing here is happening. Okay, the buyers area, but still I still go with buyers and sellers instead of buyers. So I'm supposed to consider the same option here, but I did not observe everything. I ignore it, hoping the price will drop because I saw drop base drop, expecting that sellers will enter. But fortunately, I end up losing this trade. Okay, I end up losing this trade. Okay, so that is that. I end up losing the trade. Now you see what happened. What if I decided to use 20 is it $26.09? What if I use $26.09? That means with this lost trade, I lost the trade. Okay, I already lost the trade. I lost the amount, the money. You can see I'm making profit gradually, but because of not being able to observe the market correctly, I end up losing the last trade, which I'm compounding, a compound trading. I end up losing, then I blow the account. So immediately I saw this impression. Do you know what I did next? I stopped trading immediately. Okay, I stopped trading immediately. I did not open any trade. I've already my balance was $26.09, but now it's now 21 because I already lost $5 out of it. So in that case, I stopped trading immediately, which means that in the next few hours I'll be back to continue from this $21 to at least $100. If I can accomplish $100 today, maybe tomorrow I will take it from $100 to 200. So gradually, you continue to make consistent profit. It is not necessary you open, you overtrade the market. You see what I did here? I observed the market closely at a close range, look at the outcome, weigh my option, like should I buy or sell? Okay. Also, look at the possibility of my prediction. Okay, is it going to give me a negative or positive? Okay, so one thing you should know that in trading, losses is inevitable. Okay, it's inevitable. That means it is not you can't escape it. Unavoidable. You can't escape it. So losses are bound to happen in trading. Mostly, losses are bound to happen in trading. All you have to do is patiently wait for perfect market structure. Okay, and patiently wait for your entry for candle to close. Okay, and also control yourself. Don't overtrade the market, just control yourself. Okay, being able to control yourself will give you the privilege of understanding the market very well, understanding the in-depth of market or price action. Okay, I've already know what is going on. I should know that there's so many reasons why I shouldn't go with sellers here, but I ignore just to place my trade. Okay, because I'm doubting, because I only see something here. that if this is a bullish market, right, that means this is going to be change of character, right? Okay, this is going to be change of character. Okay, that means this also will be supply. But I did not consider what happened here, that the market has already begun its movement from here, from this demand. So, followed by candlestick psychology, rejection from demand, SOS, which is a uh, bullish strength. Okay, so it's possibly, and also no rejection, no sign of sellers. Instead of going with buyers, no sign of sellers entry on this candlestick. Okay, no rejection. So definitely it's a sign the buyers are very more active than the sellers. So I did not observe it. I only consider going with sellers based on the previous analysis. Okay, but I did not observe it. Okay, so that what I'm trying to say is that it is not necessary. Okay, it's not necessary you win all the time. There's no holy grail strategy. Okay, there's no strategy that will give you 100% winning all the time. No, there's no strategy, there's no setup that will be giving you winning trades, winning profits all the time. That's why I said losses is inevitable or unavoidable. It is bound to happen. All you have to do is control yourself, control your capital, control yourself, control your money. It's not easy to control yourself, but at least practice it. Okay, at least practice it. So I think I should stop here for today. That is how you can make consistent profit in trading without any interruption or without blowing your account. So go and practice how to control yourself. Okay, practice how to control yourself, how to control or how to stay safe in trading. It's not necessary that don't over trade the market. Okay, okay, and do not say as a beginner, don't say you want to take 5 trade or 10 trade in a day. Okay, as a beginner, don't take 10 trade in a day, because 10 trade, it is not possible you can accomplish 10 trade. And also it is possible you can accomplish, but it's not going to be happening every day. If it happen today that you accomplish 10 trade today, tomorrow it might not happen. So because of the not the because of the what you observe the previous day, that you are able to accomplish 10 trade the previous day, so it means that you're going to accomplish it the following day. Okay, so but sometimes you end up losing account because you saw that you're able to accomplish 10 trade previously, but now let me accomplish 10 trade. So definitely out of this 10 trade, you are winning, and at the end of the day you lost. Out of 10, you lost 5, and you say you want to accomplish. No, just don't do that. Okay, don't overtrade the market. Even though you have chosen one strategy to use to deal with the market. 3 to 5 is enough in a day. 3 to 5 entry or trading is enough in a day. So don't say you want to accomplish 10 trade. No, 3 to 5 trade. Like the PDF setup I share with you. Okay, if you try to understand how I draw the level, if you understand how I draw the level, or how I was able to identify the market structure, then you will know where you place your trade, buyer's area, seller's area. Once you know the buyer's area and seller's area, it is very easy to predict next candlestick, understand the market structure and predict next candlestick. Okay, so sometimes you see a bullish engulfing pattern on the chart, then you place your trade expecting the price to go up, but fortunately the candle just reverse spew and you end up losing the trade. Then you might be saying that, what exactly, how did I do it? How was I able to identify bullish engulfing pattern? It worked for me, but you identify bullish engulfing pattern doesn't work for you. It is not something is not something I did not apply anything. I only apply psychology in trading. Okay, expecting that when the price reach a level, there's going to be a sign market is likely to continue or reverse. So this sign I'm waiting for is the pattern, candlestick pattern. Okay, so I'm waiting for any of these candlestick pattern to form. If I see any of this candlestick pattern followed by confirmation, which is the sign of strength, it means that I already know what is going to happen next. So that means that is how you can stay profitable consistently in binary option. So I think I should stop here for today. Don't worry, I'm going to share you the video. You can watch and see how I trade. Okay? Okay, no problem. So you see you next class tomorrow. Yesterday I was unable to conduct the class because I'm having a bad network. My network here is very poor. So that is why I couldn't conduct class. But today, I think tomorrow we continue. I'm going to show you another strategy. Okay, I promise strategy on during our live section, but tomorrow I'm going to show you another strategy. Just be prepared. Same time tomorrow. Okay. Good night. Have a nice day. Bye bye.